Rohr here with a concise highlight on Friday, August 22nd, 2014. It's currently 7:15 a.m. Central Daylight Time, and this is going to be concise because everything that's going on with the foreign exchange is still very consistent on a relatively quiet day with our analysis from yesterday morning's global view. And same for the short money forwards. On the macro side, we are going to get the significant influence of speeches from Janet Yellen at 9 a.m. Central Time and Mario Draghi at 1:30 in the afternoon Central Time from the Kansas City Fed Symposium in Jackson Hole, Wyoming. And don't forget that Monday is a UK summer bank holiday. Markets are closed. What does this mean to the markets after the S&P 500 pushed up to a new all-time high yesterday? Well, as we look at the level of the old high up at 1985.5, the market is not really all that much above it, and it was pretty quiet up there. But the truth is, unless the bears can get the market to start breaking back down, the next oscillator resistance this week and topping line resistance is up at 2005, and that moves up to 2010 next week. So while the market has not gotten that far above 1985.5, the burden of proof on the bears is not just to get the market back below that level to say it didn't escape to a new high, but also to get back below the more important previous historic congestion around the 1975 to 78 range that it ground its way up through between Tuesday and Wednesday of this week. And what we still see, interestingly enough, for all of the quietude of the rally, is that the hourly MACD remains out above its upper runaway band. So even though the short-term RSIs have started to react a bit and the stochastics appear to be up at levels where they could be topping, you can see how the hourly stochastics been up at levels where it maybe should have been topping and putting in a drop back down since Monday when the market was back in the 1967-68 area, but it just didn't happen. So quite a bit is going to be decided by whether the bears can at least get this market back below the 1985.5 area to begin to diffuse some of the upward strength. And of course, that should be tied in to whether the likely accommodative words we're going to hear from Janet Yellen are enough to sustain the market once she's done.